excellent client service and provide a very end-to-end client service. Uh, so today we are going to, have a good session. We're going to have a learning session of UAE Corporate Tax. We have three presenters, Mr. Sheetal Soni, Karishma Suvarnakar, and Pratik Toshniwal, today with me. Um, Going to the next slide, just talking about what MI Capital is all about. We have approximately 250 plus years of combined industry experience. We have done $350 million plus funding. Uh, we also have done 250 plus valuation, due diligence, and modeling projects. We have seven chartered accountant in our firm with 15 plus years of experience. Um, we have done 200 plus real estate financial modeling and 100 plus new businesses we have formed in MI Capital Services. Going to the next slide, we have a good board of directors with excellent. Uh, so yeah, that was it. I'll hand it over to Mr. Sheetal Soni, who is our next presenter. He is a CFA charter holder and has extensive experience with valuations, capital raising within UAE, and he's here in this country for last 20 years. Over to him.
Thank you, Darpana. Thanks a lot for the introduction. Uh, First of all, very good evening and warm welcome to you all on behalf of Astrolabs on our webinar Simplifying the UAE Corporate Taxation. At the onset, thanks to you as well for your vital time for attending this webinar. Ever since the UAE announced corporate taxation to be applicable within the country, people have been waiting for the federal law. On 9th December 2022, the UAE Ministry of Finance published the corporate tax law, which will be effective from financial year starting on or after 1st June of 2023. This follows the public consultation document that was released on 28th of April 2022, which described the main features of the planned CT regime as well as the principles applied for the CT regime. The wait is over now, and we, MI Capital Services, along with Astrolab, are here to simplify the corporate tax law for you. I don't know if Albert Einstein really said this or not, or it's just a WhatsApp meme. But one thing is very, very clear. We all know that laws are never simple, and more so for the tax laws. We have tried to simplify the interpretation of this law as much as we can for your better understanding. I am in UAE for last close to 2 decades, as Darpana mentioned, and we all got used to zero taxation and almost nominal compliance requirements in this country. UAE has long enjoyed the tax-free status, which started to change since 2018, when UAE introduced the indirect tax for the first time in the name of VAT. The introduction of corporate tax is a big change and reform that will impact how we all conduct business in this country. If we were not aware how much we should have been thankful to this amazing country, now we know the tax rates in place. We can quantify that as well. The introduction of federal corporate tax regime is intended to help the UAE achieve its strategic objective and accelerate its development and transformation. The certainty of competitive tax regime that adheres to international standards together with UAE's extensive network of double taxation treaties will further cement UAE's position as a leading jurisdiction for doing business and investments. This introduction of law now officially changes UAE's status from no corporate tax jurisdiction to a low corporate tax jurisdiction. When I say low corporate tax jurisdiction, I present this slide to you with about 100 plus countries' tax rates, and you would see that most of the countries are falling over and above 15 to 20% tax rates, while UAE stands at 9% according to the law that's been published. Given the position of UAE as an international business hub and global financial center, the proposed UAE CT regime has been built from best practices globally. and incorporated principles that are internationally known and accepted. So there is no reinvention of a wheel. So that ensures that UAE regime will readily understood rather than introducing new concept that would need to be evaluated by the investors. Now let me take you to certain salient features of this law before I hand over to my colleagues. The tax rates have been kept at 0% for income up to 375,000 dirhams. If you are running a startup or an SME, there is a good relaxation in that sense that the tax you don't get charged until you make a net profit of 375,000 dirhams. Over and above 375,000 dirhams, the tax rate is 9%. As we have seen, even the 9% stands one of the lowest in the world. Global income of UAE entities will fall under the purview of UAE Corporate Tax Law. We'll discuss in detail about it, and there are certain conditions to it, and there are certain relaxations to this as well. Special concessions are being given to certain qualifying free zones earning certain qualifying income. And there are, of course, there's subject to certain conditions which we will discuss during the course of this presentation. As the name suggests, it is a tax on corporations and businesses, not on individuals, like your salary income or other sort of income which you earn as an individual. Further, no taxation on personal investment income as well in the hands of individuals. So if you have made certain investments in the securities, in real estate properties, you earn rental income, you earn dividend income, this tax law does not cover it. At this point of time, UAE does not have personal taxation. CT is not levied on capital gains earned on individual capacities. If you buy a house at say million dirhams and if you sell it at 1.5 million dirhams, it is not even applicable on it because it's a capital gain that you earn on your personal investments. Again, this is all about personal. If all these things are done in the name of companies, then it falls under the purview of corporate tax. Withholding tax has been capped at 0% for the time being as per the law. However, we feel that it may change over the period of time. Further, there are provision of tax groupings, carry forwarding of previous year's losses, etc. based on the globally accepted taxation principles. This law will be effective from 1st June 2023 and will be applicable on you based on your financial years that will start on or after 1st June of 2023. We'll discuss in detail about it to clarify this, but in a simple form, if your financial starting from say January to December, then your applicability will be from 1st Jan 24 to 31st December 24. Because this is the first full financial year starting on or after 1st June 23. Now, my bright and young colleagues, Pratik and Karishma, will be taking us through the various important topics within the law. During the course of the presentation, we'll conduct some quick polls and interactive sessions which we hope will help answer some of the burning questions you may have in your mind. Slides, but particularly pertaining to law, can get very boring, so we have kept it that way so that we lighten up between the two when Pratik and Karishma presents. You may still have some queries. Please do write the same in the chat box. I know a lot of people are attending it on YouTube. There might be 3 seconds of streaming lag, but please write your queries there and we'll try to take them towards the end of our presentation. Darpana, over to you. Thank you.
Next we have Ms. Karishma Suvarnakar, who is going to present and talk about more details about corporate tax. Karishma.
Any resident person who is a juridical person and is established in the UAE, even if it is established in the free zone, will be considered as a resident person and as a taxable person. Secondly, any person who is a juridical person and is established in a foreign jurisdiction but is effectively managed and controlled in the UAE, he will be considered as a taxable person. And lastly, a natural person who is conducting a business activity in the UAE will be considered as a resident person. Now, the global income of all these resident persons will come under the purview of the corporate taxation, and they will be levied corporate tax on the global income they are earning. With respect to the non-resident person, if a non-resident person has a permanent establishment in this state, or if he has a state-sourced income, then only that income he is earning will be taxable under the corporate tax regime, and then only he will be considered as a taxable person. And lastly, the branch of a resident person will also be considered as a taxable person. Now, with this definition of resident person, now with the definition of resident person, non-resident person, there are other definitions which are need to be going forward. So, very first, a juridical person. As I mentioned in the resident person, that a juridical person who is established in the country or in the UAE will be as a separate legal personality which is separate from their founders, owners, or directors. That is, they are not related, have a completely individual identity. They will be considered as a juridical person. Secondly, the law states that the taxability will be applicable on the business and business activities conducted in the UAE. Now, what does it mean? The business and business activity can be a vast diversified, that any activity which is being conducted regularly by any person, whether local, is being done in the country. Now, with respect to non-resident person, as I told, that if a non-resident person has a if he has a permanent establishment or any fixed place of business in the UAE and is being managed by his entity or any other person who is located outside the country, then it will be considered that he has a permanent establishment in the UAE. Although there are certain exceptions which have been provided where it can be said that at that particular point of time it cannot be considered that the non-resident has a fixed or permanent establishment in the UAE. Say for example, if the person in the UAE is only storing or displaying the goods or just acting as an intermediary for the non-resident person, but he himself doesn't conduct the business, then that is not considered as a fixed establishment and it will not be considered that he is a taxable person in the country. And lastly, for the non-resident person, they have stated that he should have a state-sourced income in the country. Now, what does a state-sourced income mean? If the non-resident person is deriving any income from the resident person in the country, state-sourced income, even if the non-resident person is deriving income from the non-resident person from another non-resident person, but it is connected with the permanent establishment of that non-resident in the country, then also it will be considered that the income is earned from the UAE. And lastly, if the income is derived from any of the activities or the assets or capital invested that is being benefited from the state, then it will be considered as a state-sourced income. In a very short and a very simplified manner, if I say, they have made very clear that any income which is being earned from the country and which is benefited within the country, only that income will be taxable. That might be applicable on the resident person or even the non-resident person. Moving on to another category of the law, that is the exempt persons. As any person, as I mentioned, that every time any person is taxable and certain persons are kept exempt, that is, they do not have to pay tax and they are not liable to corporate tax liability. So under the corporate tax purview, there are certain categories such like the government and government controlled entity, any person who is engaged in extractive and non-extractive business of the natural resources, or any qualifying public entity or any qualifying investment fund, and any private fund or a social fund and other categories of person, then they would be the exempt category. Now I would like to take in deep the each and every category of the exempt person for the better understanding of how they will be taxable under the corporate tax regime. Very first comes the government and government controlled entities. Now, activities, and that will be treated as a separate independent business. Also, they have to calculate their taxable income separately and independently from the other business activities that they are conducting. Also, any transactions that is being conducted between the business activities they are conducting and the other activities which are kept exempt, they will be treated as a related party transactions, and the arm's length principle and the transfer pricing rules will be applicable on those transactions being conducted between them. The government and government control entities can anytime apply to the authority for all their business and business activities to be treated as a single taxable person, and they can file a single corporate tax. Moving on to another important category, that is extractive and non-extractive business of natural resources. Now, as we all are aware that the extractive and non-extractive business of natural resources has been levying a Emirates level taxation. That is, they are already being levied tax in the country under each individual emirate level. But to be exempt, hence they have been kept exempt under the category of corporate tax. To be exempt, they have to fulfill certain conditions. Very first, they need to have a right of interest to conduct the extractive business in the local government. Secondly, they are subject to tax under the Emirates level, and they have made the application and notification to the ministry that they are already being levied taxation under the Emirates level. It may also happen that the extractive and non-extractive business can have other income and also the extractive and non-extractive business. Now, if they are having other business as well, and that revenue is exceeding 5% of the total revenue, then it will be taxable under the UAE corporate tax regime. And the same business is earning revenue of less than equal to 5% of the total revenue, then it will be by default taxable under the Emirates level taxation, and on that income they don't have to pay the corporate tax. It may happen that certain times there might be common expenditure between the other business and the extractive business. In that case, it will be apportioned based on the revenue they are earning from the business income and other business income. Yes, so you have an...
Sorry, I don't understand fully the other business side of it. So, what do you mean exactly with the other business?
Like they are having any consulting or any servicing other than the extraction of natural resources. If they are having that business, then it will be considered as the other business, and it will be taxable under corporate tax. But their extraction business, that will not be considered under taxable
Karishma,
tax.
I think most of the viewers here would be startups, fintechs, trading companies, DMCC and all that. This might not be relevant to them, but let's skip those things which
Okay.
might not be relevant to something of this, but at a very high level. Yeah,
Okay.
no worries. Makes sense. Yeah.
Moving on to another exemption
This might be
category.
something which might be interesting, probably. Yeah, you know.
Their income and assets are used exclusively for the purpose of their public benefit, then they will be exempt. But at any point of time, if these conditions fail to fulfill, then they will be taxable and corporate tax will be levied on the income other than these. The another category is the qualifying investment fund. Now, as we all are aware that the qualifying investment fund has been the one of the legal entity which is being emerging in the country. So qualifying investment fund has been kept exempt from the purview of the corporate tax, but for that also they need to fulfill certain conditions. Very first, the fund or the fund manager is regulated by the regulatory authority within the country or even the foreign competent authority. So if they are registered and regulated by such authority, then they would be exempt from the corporate tax. The second is the interest that is being earned on the investment fund is being traded on the recognized stock exchange. So if they are traded and available globally, then that would be also exempt. And the main principle of setting up the qualifying investment fund is to avoid the corporate tax. If all these conditions are satisfied, then the qualifying investment fund would be exempt from the corporate tax regime. Now, partnerships. Now, usually the businesses set up the partnerships for having the ease of compliances and having heavy burdens of compliances on them. There are three categories of partnerships, as you can see, very partnerships. Now, unincorporated partnerships are the partnerships where there is just a contract between two parties to set up a business and start on their operations. So, if unincorporated partnerships has been kept as has been kept under the exempt category, and they will not be treated as a taxable person unless they make an application to the authority to be kept exempt from such category. But even though they have said that the unincorporated partnerships will not be treated as a taxable person, but the individual partnerships, they will be treated as a taxable person, and corporate tax will be applicable on them. So any income the individual partners are deriving from such unincorporated partnerships, it will be taxable under the corporate tax regime. The incorporated partnerships are by default be treated as the corporate as the taxable persons, and corporate tax will be applicable on them. With respect to the foreign partnerships are also treated as unincorporated partnerships, but for that they need to satisfy certain conditions, and the conditions are that they are not subject to tax in the foreign jurisdiction. Even each partner individually is subject to tax on the distributive income from the partnerships, and such other conditions as may be prescribed, that will be clear when the executive regulations will be out. Now the family foundation. The family foundation has been one of the most important criteria and legal entity that has been emerging, and people usually manage their funds by setting up a family foundation. It's a very good news for the family foundations that they can be treated as an exempt person, and they will be treated as unincorporated partnerships, and as I mentioned, as unincorporated partnerships would not be treated as a taxable person. So family foundations can be benefited from this conditions, but for that they have to satisfy certain conditions. That is, they have to be established only for the benefit of the identified natural person or for the benefit of the public entity. Their principal activity is just to hold, receive, or invest and distribute the corporate taxation. Now, the authority may request the information from time to time to the family foundation to just check that they are being fulfilling all these conditions at every point of time. Now, free zones. Free zones have always been benefited a lot within the country, and they have been granted many such exemptions even from the prior taxation regimes. The same has been continued in the UAE corporate taxation as well. Under the corporate tax regime, under this UAE corporate tax law, they have stated that for the free zones, if they fulfill the conditions to be in the qualifying free zone persons, then they would be kept exempt from the corporate tax regime. So what does they mean when they say that they have to fulfill the conditions to be a qualifying free zone person is, that is, they maintain the adequate substance in the income for a qualifying free zone person. So the two main categories for a free zone person to be kept exempt from the purview of the corporate tax is only not defined yet in the law. We still await for the executive regulations again to clarify them that what they mean when they say adequate substance, and what they mean when the qualifying free zone person earns the qualifying income. And lastly,
Before jumping to the qualifying part, what is free zone person means?
Okay, let me take it. So the law, the way they are drafted, the law is drafted, they are for entities, they are using a word called juridical person, right? You and me are natural person.
Yes.
For entities, they are using a term called juridical person.
Okay.
So when they say free zone person, it's a free zone entity.
All right.
So it's a DMCC registered entity is a free zone person.
Okay, great. All right. No, because the paragraph starts with the free zone entities, then I thought like it is different than the free zone person.
Yeah, it's being used interchangeably. To make it easy, we try to use at some places entities. I think we should change it to entities. That will be for the label.
Because I
Yes.
don't know, like they start calling the people living in jihad as a free zone person.
Good one. It's a good point.
All right.
No, but I think the most important thing which matters to the audience here, and probably all those who are on YouTube as well, is and it's also for us, is to identify which free zone and what sort of income. They name it qualifying free zone and qualifying income will be exempt. However, that has been not clarified. So executive regulation will clarify which all those free zones are qualifying free zones and which all those type of income within that free zone entity which will fall under qualifying income, which will be out of the preview of corporate tax.
So what is this free zone tax holidays?
I'm coming on the same.
Yeah.
So they have said, it has been said in the corporate tax law that qualifying free zone person or an entity who is being earning the qualifying income, that would be kept outside the purview of the corporate tax. But as we all are aware that free zones are being granted tax holidays when they have already when they are set up. It ranges between 10 years to 50 years. So they have said that the tax holiday period that has been granted to individual or the respective free zones, that will continue in spite of this law. But still, that will have more clarity when the executive regulations will be out. Our interpretation is the free zone entities would be kept exempt from the corporate tax that are being given to the corporate to all the free zone entities. Like if your entity is set up in Javza, they have a tax holiday period of 40 years. So if you are into that period zone, then your that tax holiday periods will continue for your entities as well. Now till what time it will continue and what are all other regulations or conditions that they have to satisfy, that will be clear from the executive regulations. But as of now, they have said that it will continue. Hope that clears.
So effectively, corporate tax law is giving, overriding right to the free zone and free zone authorities who have already promised tax holidays to their entities. So that is what's being, yeah.
So it means that we are going to be charged the corporate tax no matter we are in free zone or not?
Not really, not really.
Other way
So
around.
suppose if DIFC for example, they have a 50-year tax holiday promised
Okay.
to entities who will establish in DIFC. And already 5 years has passed by, correct? So they are saying that for remaining 45 years, they will continue to enjoy the tax holiday status as long as they are within the qualifying, they are doing the qualifying income, they are generating the qualifying income. Now the answer that we don't have is what is qualifying income. That they will define. Whether it is doing business only with free zone entities or doing business in foreign country or even doing business within the UAE mainland. So that is something that we are still waiting for. Yeah, please.
Thank you.
So that if the law say X, so does that which prevail? This 50 years prevail or the new law will prevail?
The 50 years
50 years will prevail.
Yes.
So regardless of what the new law will
Yeah.
say, so this
Yes.
will anyway be
Yes,
exempted.
what they have said is they will say, suppose if a free zone has promised 70 years, more than 50. So up to 50 years they are okay.
So one, like if this corporate tax will start in 2023, right?
1st June 2023.
First, oh, okay. So till we have still time that we will understand all the details.
Yeah, that's why we are here.
So if I'm most likely, I don't have to bother with that. Most likely.
Also.
Yes and no.
Most,
Yes and no. Yes. If it is a qualifying free zone, generating qualifying income.
oh,
Okay.
so
And also you have to show economic substance. One of the point was having a lot of things, important things are left for executive regulations to come. Okay.
still have 6 months.
Yeah.
By and
And if your financial year is say January, you have 1 year to plan now. Because your financial year, yeah.
Now moving on to the last one, that is the branches and the holding company. Now any branch which is being set up in the country and it will not be considered as a separate juridical person as it does not have head office company. If the parent is situated in the UAE, then their income will be considered in the parent company of the UAE. And if the foreign branches, if the parent is situated in the foreign or if it is situated any country outside the UAE, then their income will be included in their income and they would get the benefit of the corporate tax credit that they are paying in the country. So that will be the corporate tax credits and all will be explained by Mr. Pratik further in the presentation. With the respect to the holding companies, if the holding companies are treated as a complete separate juridical person, and they would be liable to corporate tax. So all the holding companies that are being set up in the UAE, they will be treated and liable to corporate tax. Their taxability will depend on in which jurisdiction they are set up. So like if they are settled in the mainland, then they will be liable to tax of 9%, and if they are set up in free zone, then they will be liable to taxation of 0%, subject to the conditions that the free zone entities have to satisfy, which I explained in the earlier slide. And the last one, any dividend and capital income that is holding companies are being earning, whether from the domestic company, it will be totally exempt, and if they are earning from any from any foreign entities, then that would be exempt, but subject to certain conditions. With this, I would like to thank you for your attentive time, and I know it might be a little bit heavy to understand what are the taxable persons and exempt persons. We would now have a quick poll questions just to lighten up and have few of your inputs that about your understanding on this taxable and exempt persons. So,
Yeah.
So just to clarify, so a branch here from here from China, setting up a branch here without the separate legal entity,
yes,
are they subject to that?
it won't be subject to 9%.
They won't.
Yes,
So they will not
because that
pay.
is not a separate legal identity.
So they will not pay corporate tax.
Not. They have to
However-
include in their foreign income and the foreign.
No, that is
No,
something
no.
that don't bother about that because we are talking about UAE. They will pay there, nothing to do with us.
So they.
Subject to the substance law that we are talking about.
So if the branch is doing business in UAE, then it is called permanent establishment.
Okay.
Then it will fall under that. Yeah.
Yes.
So they still be subject.
Correct.
Yes. Yes. Anyway, I know you have questions, but I'll walk you through 4, 5, maybe 10 different questions, right? That will answer a lot of your queries, hopefully, as well.
And we have
Sir,
20
yeah.
minutes as
Yeah,
informed by
6:10 tak hi hai.
He has said 25 minutes is what we have.
Total.
Yeah. So we will walk through the poll.
Very quick.
We'll
quickly.
finish off the other part and we'll take all the questions.
Correct. Correct. Because polls will be more interesting. That will clarify a lot of your points.
So we can start with the poll.
You are switching that. Yes and no on the YouTube. Who all will be subject to UACT? Mainland entities, free zone entities, both A and B. What is your understanding so far? C. Audience? No answer? They are sleeping? Yeah, right answer is C, with certain exceptions, right? So it's a corporate tax which is applicable all registered entity in UAE. Yeah. Next one, will UACT be applicable on individuals? Yes or no? A? I think you should read the B carefully. See, you are right saying yes, but here it says yes only if individual is doing any business. Suppose if you are doing a business, proprietorship, then your tax will be applicable on you.
Now, the first question is, does you allow to do business or not?
Yeah.
If that is a separate law which will take care of that, right? As if you are doing any illegal, you are doing a business without taking any license, that's a breach of another law, right? But actually a business income. Give me 9%.
Even though it's law, you still have to pay.
Correct.
And also the freelancer.
Yes, this is the business. This is the business. Yes. If I have an investment company in foreign jurisdiction, suppose lot of people have got this, in UAE, say Cayman or Seychelles, which I manage and control from UAE. So you just open a company in some other jurisdiction and you live in UAE, you take all the business decisions of that company here. Will UACT be applicable on this company as well? What do you think? Hmm?
No.
Sir, what is the answer there on YouTube?
It's going
No one? No one?
no answer or answer is no? No answer.
Unfortunately, it is yes. If it covers all the entities registered in UAE as well as any entity which effectively managed and controlled from UAE anywhere in the world.
If I will need the dividend back to you.
Nothing to do with it. for nothing to do with dividends, that entity will be subject to UACT. Yeah. Anyway, moving on. I don't know how many of you might be interested in family foundation. If it is not, then we can switch to the next question. You are interested? Okay. So I have a family foundation registered at DIFC ADGM. Is the foundation subject to UACT? Yes, no, and both A and B as well.
1 yes from July.
1 yes.
C.
C is right. Both A and B. Why it is? That it is actually, it automatically falls under the purview of corporate tax. However, you can apply to the authorities that I am satisfying certain conditions, and you can ask exemption for it. And those, the family foundation should not do any business. This is the main condition, right? It is only for holding businesses or holding assets. I work in a company owned by my wife, which I do, and I draw salary from the company, which I don't. Will UACT be applicable on my salary income? Yes or no? Huh? No is the right answer. However, you need to satisfy a transfer pricing condition. So suppose, the company makes 10 million dirhams of profit this year, inshallah, right? And my normal salary range is say 300,000. I cannot sweep all the profits in the name of salary and pay zero to government. Correct? So that's why there is a transfer pricing rules. So which essentially says that it has to be on arm's length transaction between you and your related parties. Okay, next one. Will individual be subject to UACT on my income from personal investment, dividend, interest, bank deposit, rental income from properties? Yes or no? No? No is the answer. Huh? You want to pay tax on your personal income? No? Okay, fine. Answer is no.
But when it comes to dividend payments, etc., so like there's a holding company and one operation company. Operation company gets money from the holding company to invest in the operation, or at the end of the year, they pass the profit to the holding company, right? So in that scenario, assuming that one of the operation companies in DMCC and the holding company is ADGM. So do we pay the corporate tax double times? Because
It's a very good question. It's a very good question, because if it's a double taxation, if you pay tax at the entity level and at dividend also you pay tax, right? UAE corporate law says you don't pay any taxation on dividends, right? Although this question is for different, it is for individual, right? Individual anyway doesn't pay tax on dividend, but even for corporates, there is no dividend tax if it's a UAE entity. However, there is a different treatment if the dividend is coming from a foreign entity. We'll discuss about it. Yeah.
Earlier about saying that this transfer pricing, so we can't take a salary and maximize and reduce the profits in the end zero. Can you take some salary and if the rest comes out as dividends and you still have very low profit, then would that work?
Dividend is not a deductible expense. See, you have an expenses which you can deduct, which is expenses related to the business. Then you have a profit. Then you pay tax, and the remaining profit is your retained earning. You can take dividend out of that money. So dividend is never a deductible expense. Going next. Will rental income on properties be taxable under UACT regime? You have to carefully read the answers. The A, no. B, yes, only for individuals. C, yes, only for companies. D, yes, both in the hands of individuals and company. C, only for companies. Yes, Then what next? This is right. Fund, anybody interested in the fund related question? Dennis, you? Okay. Will our DIFC ADGM registered fund be taxable under UAE CT regime? Yes, no, no if certain conditions are met. C. Funds are kept out of the funds are given some special exemptions which Karishma just covered. Yeah, but they have to meet certain conditions for it. This is interesting. Will dividend income from UAE entities be taxed in the hands of companies? Your question. No, no, right. Will dividend income from foreign entities be taxed in the hands of companies? No, yes, subject to meeting certain exemption conditions.
If it is if there is an answer, does that like it is unclear?
B, yeah, smart. Yeah, it is. It will fall under the preview of corporate tax. However, there are certain exemptions. I am a foreign individual and earns investment income in UAE. However, I do not do any business activity in UAE. Will I be subject to UAE CT?
I'm not the expert.
No, no, no. What rate of UAE CT applicable on my qualifying free zone entity earning only qualifying income? 0? Right. I have a qualifying free zone entity with all qualifying income subject to 0% tax rate. Do I still need to register and file my nil tax return? Yes? What is our YouTube is saying? Yes? Yes. So don't feel that if you're falling under completely exempt category, you still need to file the return. Will contractors servicing, I think let it be. Will branches of UAE entities need to file separate CT return from their parent entities? Holding is in UAE, branch is in UAE. Then do you need to file a separate return? No, yes. But the answer changes for China's holding company. Yes. Will tax holidays continue to apply for free zone entities? Yes, no, yes, subject to certain conditions. C. Smart.
Can you give me an example of certain conditions? Like,
So
when would a free zone entity have to pay tax?
yeah, so you joined little later. We covered free zone sometime earlier, but we'll talk about this. Yeah. No problem. I think we are running short of time. We'll have few slides and after that few of these polls as well, and then after that, because it's a very complex. We spend around 5-10 minutes on that. Yeah. Please go ahead next. That's it. So I think we are running short of time, but you can be quick.
Yeah,
I think
I'd
people
like to have
are more
Mr.
interested
Pradeep Toshnwal, who is also a chartered accountant, and he has a good experience in mergers and acquisitions. Over to him.
Hello.
Yes.
So good evening everyone. I hope you had a quick break because of the poll questions. So what is important in the room and for the people watching live is to understand two aspects. Whether I am taxable, and if I am taxable, how much tax to be paid, right? So whether I am taxable, I think we've covered that. The second aspect is how to calculate the my corporate taxes and what will be important to be there. The next slide.
You have to press the down button.
No, it's not working. Anyway,
नहीं.
1 second. It will not work.
Press this.
Yeah, मैंने किया था.
अभी आ रहा है.
Perfect. So I know this is very small for understanding, but I will cover few parts which is very important for calculating your corporate tax and to understand whether you will be, paying any taxes or not. One is to understand the unrealized gains and losses of your capital holdings or revenue incomes that you have in UAE. The second is what are the exempt incomes
The third is the reliefs that are being provided to the person. The fourth and the most important is what is not deductible, right? The expenses which are not allowed in the law. The fifth is the transfer pricing adjustments that we were talking about on the salaries and the director remuneration. And last but not the least, the carry forward of losses and the foreign tax credit. So as I talked about the unrealized gains and losses, say your business has 1 million dirhams of profits this year, and you have a house at Palm, Jumeirah, which is a 1 million dirham asset, and you are finding a buyer at 800,000 dirhams. So you have an unrealized loss of 200,000 dirhams. If you want, you can elect to carry, set off that loss against your 1 million dirham income for this year. However, if you sell the flat or the apartment next year above 1 million dirhams, then that balance income plus the last year 200,000 will be added back next year. I hope it is clear. 1 million profit, 200,000 losses adjusted this year. However, if it was sold for 1.5 million, then 700,000 will be added back next year for your income.
So you do the valuation of the PPE.
Yeah, you have two options, carrying at a book value or carrying at a realization value.
Yes.
Right, which is if you choose to be at realization value, then you have this adjustment every year.
Correct.
Unrealized value.
Yes.
You haven't sold it.
Unrealized value is what is the value as on date of filing of return.
So that means you have to value the PPE.
Correct.
To make a booking. So you have an option to use the book value or the unrealized value.
Correct. Correct. Yes, sir.
You have two options, yes.
So, if I have a flat which has gone down over the last 5-6 years, right, I will be able to take benefit of that when the tax sale starts, right? So, for example, if I bought it at 1 million, and even now it has gone, it is at 200,000.
Okay.
Okay? That means that on July 1st, 2023,
Okay.
I can put it at 200,000 and I start July 1st, 2023 with a net 800,000.
Individual or corporate?
Both. I wanted to ask about both.
Okay.
So, for corporate is it possible, for individual is it possible?
For individual anyway, it is not required, right? For individual, it doesn't matter, right? But for corporates, what is important is to see 1st June 2023. The law comes in effect on 1st June 2023. So the asset that you're holding, if it is disclosed in the returns, then you can take a view that you want to claim that unrealized loss in your books of accounts.
But will it be that you can, on 1st June 2023, if the value of that asset is 300,
Right.
right?
If you have a substance document that says that you purchased at 1 million,
No, let me clarify. Typically, books of accounts of a corporate, we follow a principles called IFRS principles. Correct? IFRS principles does not allow you to value everything at a fair value. So any category which is under the investment properties or any securities, any investments, only that particular category you have to fair value every year, right? Whether it is a land, whether it is an apartment, whether it is an investment in securities, bonds, shares, all those. So all those things which if you whatever books you are maintaining, keep that aside for a moment. Income tax department is giving you the corporate tax, federal tax authority is giving you two options. Option one, choose the book value and continue at a book value, because you say that okay fine, I have this apartment which I bought for 1 million, now it is 500,000 or now it is 1.5 million. Why should I pay a tax on 500,000 which I have not yet realized? Dubai market may fizzle away next year, right? So they have given you the option to choose one of the two methods, and but you cannot switch on these methods according to what you feel is beneficial to you. If you choose to be on realization method, then suppose if 100,000 apartment you booked a loss of 500,000 this year, next year you sell at 1.5, then you have to pay profit on 1 million rather than 500,000 only.
so you have to elect it once, and that has to be followed. Right.
Yeah. So it's not identical with IFRS. It's more generous.
It's generous.
It is generous.
It's
UAE
generous.
corporate tax law is anyway generous.
It's generous. So
It is
IFRS
generous, yes.
is fine. You follow the IFRS, but you have this
Advantage.
advantage.
And
You can, it's an accounting issue.
Correct.
Yeah.
Correct. So quickly coming to the exempt income, we have already discussed dividends and capital gains, will be exempt certain to qualifying the conditions. So dividend from a UAE entity is exempt, but dividend from a lower tax jurisdiction from UAE, say an entity paying from Cayman, will not be exempt, right? And you have to have those following methods of participating interest that has to be followed. So you have to have more than 5% of the holdings which has been managed for more than 12 months. And also what is important is the dividends that is coming is out of those companies. So if it is from a UK company, it is always exempt, right? Because UK has a higher tax compared to UAE. Coming back to capital gain from sale of shares, it is exempt, right? And any non-resident into the business of leasing of ships, aircraft is exempt. Going towards the relief, there are two major reliefs that has been provided. One is transfer of the losses within the qualifying groups and the business restructuring reliefs. I will cover both of them quickly. Business restructuring is clear. Whether you want to sell it off or transfer, you need to do it at net book realizable value, as mentioned. You cannot do it at market value. If you do it at market value, it will be subject to corporate tax. However, for the losses that has to be transferred within the groups of qualifying groups, you have to maintain a shareholding of 75% or more. If it is not being maintained, the losses will not be able to be transferred. Now, coming to the most important and the simpler file, whether chocolate expenses in your offices that you see in Dubai will be allowed as business expense or not. So covering the deductible and non-deductible expenses, any expense relating to your business is 100% allowed. There is no doubt. So if you're keeping anything related to business, say petrol, it is allowed as your expense, right, for a car. But if you're paying a bribe, you're paying fines, you're paying donations, you're paying, any VAT which is recoverable, then all of those is not allowed. Absolutely not allowed as your deduction. And there is one important aspect, which is entertainment expenses, like meals, wining, dining, all of your leisure expenses that you do on transportation, facilities, all of this is subject to only 50% deductions. So, if you go out for a meal with a client, right, that will be only allowed for 50%.
Yes.
So that is something that you have to be very, very careful.
If you conduct an event for your suppliers, that is only 50%.
50% allowed. Yes.
Some countries do this with a cap of their total income, like no more
Correct.
than 3%.
Correct.
China do.
Correct.
So this is
Yeah.
everything is
Correct. Correct. So, as I mentioned, any penalties and any violations will not be allowed. However, irrecoverable VAT is allowed as deduction. Anything that you cannot claim back is allowed as deduction in the VAT regime. So, these are on the expenses. Very, very important, interest capping rules. I don't know if it is applicable here, but for the larger audience, I'll quickly touch upon this. 30% of EBITDA is allowed as your interest expense for the year. Say your EBITDA is 100 dirhams and your interest for that year is 100 dirhams. Only 30 dirhams will be allowed this year. However,
And you still have to pay tax on 70.
70. However, you can carry forward the 70 for next 10 years. It is allowed. That is generous, again, from the UAE corporate tax perspective. So they allow you to carry forward for 10 years, but it is not allowed more than 30% of EBITDA even next year.
How who will pay interest for more than 30% of the year?
You never know.
No,
See,
there-
EBITDA, there may be possibility, right? You might not have EBITDA.
See, yeah.
There is
could be
possibility.
leveraged companies.
Absolutely. Yeah. And like we discussed, if you have an entity in Cayman and if you're borrowing loans from there and there is an interest that is being charged on that for paying dividends and all, you will not be allowed on that. No interest expenditure to pay dividends from a low tax jurisdictions will be allowed on your business. So that is a very, very important, and it is called thin capitalization overall. Again, we always call it arm's length. Transfer pricing has to be followed for three major portions that we've covered. One is connected person, which is a very, very wide definition. owners, directors, related parties, like we discussed, individuals, right, in the sole proprietorship, they will be covered here. Directors drawing salaries and fees, remuneration and fees will be covered here. So all of that has to be maintained. A director earning 200,000 dirhams earlier suddenly cannot earn 1 million dirhams. So that transfer pricing has to be managed. Judicial person obviously have to make sure that that has been managed to arm's length, subject to 50% of holdings and above. What is important is for the related parties. 4 kinship generations is involved. So great grandparents, great great grandparents, your first cousins, your parents' uncles and aunt, your uncle and aunt, everyone is covered under the definition of related parties. It's a very vast definition, and any payment made from your companies to those gentlemen or women have also be made sure that it is made on arm's length. Otherwise, it will be under the purview of transfer pricing adjustments that the authorities, if feel appropriate, will make it to your total income. There are 5 methods that have been defined. However, if these 5 are not applicable for your entities, you may choose to value the arm's length as the sixth method that you may choose. Tax losses have already been covered, but I will say 75% of the taxable income is allowed as your tax losses. If you have 100,000 dirhams as your tax loss this year, and if your income is 100,000 dirhams in the next year, so 75%, which is 75,000 dirhams is right. What is also important to note that the shareholding of those companies do not change more than 50%. If they do, this will not be allowed. No tax losses to be allowed for exempt entities. That is obviously very clear because you are exempt. Tax grouping. This is very important for people who have multiple entities in mainland and free zones. Obviously, you cannot group both together, but say if you have 10 companies in mainland, you can opt for tax grouping, which saves you out of transfer pricing because you're one entity then, saves you out of, you can adjust your losses of all the other entities with your main entity, and the condition that has to be met is 95% of the shareholding should be the same. So your parent entity should hold 95% or the entities below should hold 95% directly or indirectly, either shares or voting rights. That has to be maintained. Also important is you will then be only filing one return. So one registration, one return. So these are the benefits of tax groupings that can be availed by the entities and the MNCs. What is important now is to, how to calculate it. As mentioned by my peers, corporate tax up to 375,000 dirhams is 0%. Over and above is 9%. Obviously, you are allowed to, set off your losses and foreign tax credits subject to UAE tax on that foreign sourced income. You cannot claim higher than that. So that's the only condition that has to be maintained. Withhold.
I pay the tax, let's say I make 1 million, I have to minus 37,500, then the
Yes.
Yes.
then
On 625,000 dirhams, you have to.
times 9%.
Correct.
Then you can always, deduct your losses and also your foreign tax credit from the taxes. So 325, then you calculate tax, 9% tax, which will be subject to 56,000, 60,000 dirhams. Out of 60,000 dirhams, you have your withholdings that can be deducted or foreign tax credits that can be deducted. If not, then 60,000 dirhams is your total tax liability. Withholding, yeah, please. You have a
So
question?
the foreign tax paid
Yeah.
deduction, if the foreign tax, let's say, less than 9%, that means I have to pay that.
What you have paid then, that.
Yeah.
If it is 7%, then that is the case.
You have to pay, if they pay only 2%, then I have to pay 7% of the foreign account. If there's above 9%, if let's say in certain country I pay 30%, do I get the credit?
No, only till 9%.
So kept by 9%.
Yeah.
UAE will not pay taxes that you pay in China. This is
Withholding
when you are trying
tax.
to take it from UAE government to pay to China, it doesn't work.
Withholding tax is limited to 0%. What is required to be done by each and every individual corporates, that is very important, is you need to start preparing, or start getting yourself prepared for the corporate tax regime, because every taxable person has to get registered. whether he has taxable income or not. So you have to get those registrations. Any company wanting to deregister in the future years can always deregister. You have to maintain your books of accounts for 7 years. The records have to be maintained. And any penalties and violations for not filing of CT, not registering for CT will be applicable, and the guidelines will be there in the executive laws that will be coming ahead. But as mentioned, you should start getting ready. You need to maintain your financial records. Whether audit is compulsory, not compulsory is not defined. But your financial records should be maintained. Your bookkeeping should be strong so that if you're applicable, then you can always get your books audited. We've covered this, but briefly, just 1 minute. Filing due dates after 1st June 2023. If your calendar is July to June, then obviously you need to maintain from your applicability will be from 1st July 2023 to 30th June 2024. It gives you 9 months to file and pay your taxes, which is 31st March 2025. Similarly for Jan to December and to April to March. So thank you so much. This is all from the computation of your taxable income. We'll take few poll questions.
Yeah,
We'll take those poll questions quickly. Visible? Yes. Sir.
Yeah, go ahead. While calculating taxable income, can I deduct all business and personal expenses from my business revenue? A, only business expense. B, only personal expense. C, both A and B.
A. Sir.
YouTube?
A.
What YouTube is saying? No, nothing.
But yeah, you're correct. Only business expenses are allowed.
In my business, I have a positive EBITDA. However, net profit is almost nil due to significant interest cost. Burden on my business. Do I still need to pay UAE corporate taxation? No, possibly yes. Because of the interest capping rules, only 30% of the EBITDA is allowed. Yes, right.
Correct.
Can I file one single UAE CT return for all the companies I own in UAE? Yes, if I choose to form one single tax group meeting all the conditions. B, no. A, excellent.
Perfect.
I think you have been very clear. My family owns and controls multiple companies and there are intra-group transactions including intra-group company loans. Right? Do I need to comply with transfer pricing rules? A, yes. B, no if the tax group is formed. C, both A and B. This is tricky, huh? Take your time.
YouTube says yes. Okay. C. The audience here is probably very correct.
C is the correct answer
is the correct
because if you don't make a group, then you need to comply with transfer pricing rules, right? Because then it's an arm's length issue. If you make one group, then you don't need to. That's a good one. I run a startup, more relevant to Astrolabs now. I run a startup which is expected to remain in losses for first 3 years. Will I get benefit of carry forward of losses in futures when I start making profits? Yes, subject to certain restrictions. B, no. A, correct.
A is the correct answer.
I won't. This is complex. Eh? Shall we skip this?
We can go ahead.
Okay, we have time.
We have 10 companies.
Okay. Yeah.
We qualify for a single tax group. For all those companies, however, do we get the benefit of 0% tax on to only 375,000 dirhams, or the whole groups get 0% threshold will increase to 3.75 million? So
See why this question? For every company there is a limit of 375 0% tax rate. But if you make a 10 company as one group, do you get a benefit of 3.75 million, or do you get a benefit of only 375?
should be paid. YouTube says
YouTube
A.
says A.
So I think YouTube is
It is
correct.
A.
It is A. Yeah.
Yes.
No, it's not. Yeah.
A. Yes.
Can foreign entities be included in tax groups? No. YouTube? No answer?
No.
No?
No is the answer.
No is the answer. Is audit mandatory under UAE corporate tax regime?
C.
Okay.
C. C.
Yeah. Like I mentioned, only if they require, you have to get
Yeah.
it.
Federal
Tax authorities. Do I need to register my company with the authorities for UAE corporate tax even if my company is dormant with no business transactions for the financial year?
Yes.
Perfect.
Yeah,
That has not been defined.
We'll come to that.
We'll come to that. Do I need to register my company with UAE corporate tax separately even if I'm already registered for VAT?
Yes. Yes.
Correct.
Quick one. Will we have two separate tax numbers? One for the VAT,
Yes.
TRN, and
Yes.
another? Why don't we have only one tax number?
How often I need to file the UAE corporate tax return? Annually, quarterly, both? YouTube answers? No? Annually.
Correct.
Correct. I deal in various currencies. In which currency I need to file UAE corporate tax return? USD being widely globally accepted currency, AED, both. Both. B, B. A, B.
B is
I
the
think B is the correct answer because here it is dirhams, right? So you need to follow AED as your return. That's it. Thank you.
There are one or two more questions.
It's-
Yeah. That's it. Yeah, go. Yeah. Yes.
What should I do? What should I be doing to prepare for the UAE corporate tax? Sit and do nothing? Understand its impact on my business and plan for its effective compliances. Hey, perfect. This is good.
The last one.
Are there any consequences of not complying with UAE corporate tax laws? Yes.
Thank you.
Yes. Thank you. Thank you so much.
This was a great session, and thank you for being an interactive and participating in this poll questions. I like to first thank Astrolab for giving this us this opportunity and uh, spreading the information, sharing what we know about corporate tax with the audience out here. Thank you so much. I'd like Sheetal to add a few more comments. Yeah.
Thank you very much. Thanks again, Astrolabs, and thanks for asking all relevant questions. If there is any further doubts that you may have, we will leave our corporate profile here. You can reach out to us any point of time. We'll be more than glad to help you and add value to your business. Thank you.